Hey everyone, welcome back to Debt Free Insider. Home renovations can be very exciting, making your space more comfortable, maintaining the structure, and perhaps increasing the value. With that said, if you're not careful, financing these projects can lead to credit problems and long-term debt. In this video, we'll break down what you need to know to keep your finances and credit safe while transforming your space. It would be appreciated after the video if you could subscribe, helping us grow our channel by providing important information people need to know about debt and finances. First, let's talk about interest rates and fees. Contractor financing might seem convenient, but could come with higher interest rates and hidden fees that you are not aware of. If you make late payments, they can lead to extra fees that add up fast. Be sure to ask for a clear breakdown of all fees and compare this option with others to make the best choice for your finances. Next, let's talk about how a renovation loan can impact your credit. Before deciding on this loan, make sure you ask yourself if the monthly payment is something you can realistically manage, even if things get tight. The reason is you miss payments or are late. These factors can affect your credit score at the credit bureau, making it harder to obtain other credit you might require throughout the renovation loan term. Some contractors may add a lien clause to the loan, which means they could put a claim on your property if payments aren't made. Essentially, they have the right to take legal action on your home to recover their money, which could lead to serious financial consequences. And of course, this would further damage your credit. If a lien clause is in the agreement, make sure you're fully aware of what that means and have a backup plan if things go wrong. Home projects rarely finish on time, and delays can cause financial stress if you're forced to start repaying the loan before the project is completed. This could mean paying for both the loan and temporary housing or other costs while construction is unfinished, which can pile up and add to your debt. Try to negotiate the payment schedule with your contractor so that payments start only once the work is done. Finally, think about how this loan will affect your overall debt. The more debt you carry, the higher your debt-to-income ratio, which can make it harder to qualify for other loans. Plus, a high debt ratio could signal risk to lenders, which might mean higher interest rates on future loans. So, consider if the project is worth the added debt. Could you start with smaller renovations or look for other financing that won't add as much to your credit report? Remember, a home renovation loan is a big commitment. Protect your credit by researching all options, asking questions, and making sure you're clear on every part of the agreement before signing. If this video helped you, please hit that subscribe button for more insights on managing debt and protecting your financial health. Thanks for watching Debt Free Insider, and see you next time.